Chairman Credit Suisse, who's been a prominent fixture of all the 30 years that he has already spent at Credit Suisse. He is a member of Credit Suisse's investment committee, also has responsibility globally for the management and development of new business and client relationships for Credit Suisse. Today, he is going to talk about how Russia and Russian banks are perceived by the international investor or investment community. So, what do we look like, and how do we make ourselves look better? Welcome.
Easy question, easy answer. Good morning, ladies and gentlemen. In fact, in my discussions with the organisers of this conference, I was actually asked to touch on 4 subjects. First of all, how we perceive Russian sovereign risk. Secondly, bank risk and the Russian banking market generally. Thirdly, our investment strategy towards Russia, and fourthly, which is actually the topic on my opening slide here, a very interesting subject which is very relevant to all of you, which is the future development of Moscow as a financial centre. Now, let me deal with the first 3 questions actually very quickly indeed. First of all, I am very comfortable with Russian sovereign risk. If we look at all the macroeconomic indicators and the financial indicators which drive a determination of sovereign risk, Russia actually scores very highly. The budget position is not under pressure. We have a very significant trade and current account surplus. We have a stable and, I would argue, undervalued currency. So if one looks at, for example, sovereign risk indicators on Russia compared with a number of other countries relative to the world, I would much rather have Russian risk than, let's say, a lot of European risk. And obviously a lot of European countries at the moment, and particularly my legal and compliance department says I'm no longer allowed to call them pigs. I have to call them the stressed countries. But if you look at Russia, the macro risk indicators relative to the stressed countries in Europe, Russia obviously scores very highly. So question number 1, I am very comfortable with Russian sovereign risk. I think secondly, if one looks at bank risk, and here I'm going to caveat my comment by just focusing on the top 5 Russian banks. And there, again, I am very comfortable with risk. If we look at non-performing loan ratios for the major Russian banks, they are at very acceptable levels. If we look at risk management systems, again, a lot of very good progress has been made in recent years, and risk management is not a problem. And again, comparing Russia with the Eurozone banks, I think we've got a very clear situation at the moment whereby the repair work, the recapitalization, the restructuring of many of the Eurozone banks is still work in progress. And I think I may actually still be making that statement in 2 to 3 years' time. We have still got a long way to go before many of the Eurozone banks are in a situation of capitalization, liquidity and profitability which they and the regulators are comfortable with. That is not the case with the large Russian banks. Now, I keep using the word large Russian banks because, in my work in Russia over what is now close to 30 years, one comment I have made particularly since the 90s is that Russia consistently is characterized by too many banks. And whereas you have these large successful banks at the top, there are many medium and smaller banks which I think over the period of time will be consolidated, taken over, or which will go out of business. So that large number of Russian banks, I think, is an issue. On the third subject, investing in Russia, I think I made the statement last year that we are very comfortable with Russia as a place to invest. We are long the Russian equity market, and partly that is due to valuation. Russia is one of the cheapest markets in the world. If you look at, for example, price-earnings ratios of the Russian market compared with some of the more expensive markets at the moment, let's say in Southeast Asia, there we have price-earnings ratios on markets like Thailand, Malaysia, Indonesia, well into the teens, and obviously the Russian price-earnings ratio, and one can get into a debate on how to define what is the appropriate price-earnings ratio, but Russian price earnings are typically less than 50% of what we are seeing in a number of other markets. So those cheap valuations I actually regard as very compelling. Now, let's get into the fourth subject, which actually I find by far and away the most interesting of the four subjects I was asked to talk on. And earlier this year, I and part of my team actually carried out a survey, which I want to share with you, whereby we have scored on 5 broad categories major financial centres. And I deliberately haven't included Moscow in those financial centres because Moscow was not part of the exercise to start off with, but I want to show you how what the criteria that we use for seeing whether financial centres will succeed or not in the future. And the first of my 5 success factors is people, human resources. And really here 4 factors. To have a successful financial centre, you have got to have open immigration to attract very highly qualified people. I think it's interesting to note that 2 or 3 years ago, and the scores are all out of 10, by the way, the score for London would have been 7 or 8. And the British government, I think, is actually doing something extraordinarily unhelpful by making highly qualified immigration more difficult. Singapore scores well, America scores well, Tokyo scores very badly indeed. Then income tax and capital gains tax is very important. I can tell you actually in the last few years working in London as I do and paying 50% tax is actually not very pleasant. As you can see, Paris here scores 3. And I think you would all agree with me that paying 75% income tax is even less pleasant than paying what I pay in London. And one of my jobs is I sit on the board of a French bank, and all the French on that board have got a very simple strategy. How quickly can we pack our suitcases? And income tax, and here Russia actually has a very strong competitive advantage. But high levels of income tax obviously discourages people. Then the third people factor, education. And education, actually, in the case of Moscow, has traditionally been a very strong point. The educational system in Moscow, I would actually score very highly indeed. But, and I'm not just saying this because Alan Riley's here, but this is where London does score very well. It does not have universities which attract foreign young talent. And then obviously the fourth factor is quality of life issues, pricing of real estate. And I've given here Frankfurt a very poor score just because of the quality of the stock of real estate. Likewise Tokyo, super expensive, difficult to find attractive real estate. But then Paris and Switzerland score very well indeed. Then if we move on to my second key factor, the business environment. And I think one very interesting indicator here is the amount of bureaucracy involved in setting up a new business. And there is a survey of which I'm sure many of you are aware of, which is the number of days it takes to establish a new business. Here, in the financial sector, New York and Singapore score very highly indeed. London, since the financial crisis, the score rate actually has come down. Switzerland, the score rate is pretty good. I think the next factor on the business environment, which is an open policy for non-bank financial companies. How successful can you be in attracting private equity firms, real estate firms, infrastructure firms, hedge funds? Moscow actually now does have a number of successful hedge funds, but the clever and intelligent development of financial investment companies outside the banks, I think, is very important. And then coming back to my question about bank risk, obviously, one factor is to have a banking system which is well capitalized and where systemic risk is low. And obviously, since the financial crisis, since 2007, 2008, London and Paris, the scores are low. New York, actually, I would argue, when we carry out this survey next year, will actually see a significantly higher score, given my view that the American banking system is now largely restructured and largely recapitalized. Singapore, Hong Kong, Tokyo score very well. Then the third factor, market access. And, it is critical to become a successful financial centre to have very liquid, well-traded, deep, significant market-making capacity in debt and equity markets. And the development of the Moscow exchanges, I think, is an important consideration to develop Moscow as a financial centre, and particularly to make it an attractive place for foreign IPOs. And this is one area on foreign IPOs where the London Stock Exchange and also the Hong Kong Exchange has been very successful. And if you look at the composition, for example, of the FTSE 100 or the FTSE 250, there is a very significant foreign component, and that is why London here scores 9. I think a second consideration on markets is very broad, liquid, easily to trade, good administration systems for derivatives and commodities. And the development of Moscow there should be an absolute natural. Given the commodity base of the economy, one would assume that Moscow could become, a world leader in commodity trading. And then in terms of other products, foreign exchange, global fixed income, London has very successfully become the leader in foreign exchange trading, global fixed income. This, of course, was the home of the Eurobond market. And then global equities. And I don't have to go to New York to buy and sell IBM shares or Asian shares, and to actually have trading platforms which are not correlated with the domestic market or the domestic economy is important. And then I think a final factor on market access is obviously to be a trade and insurance hub. And to have that as a centre for bank trade finance. Again, London, some of the Asian markets have done very well here. Dubai is trying, and I would argue now, post its crisis, is actually rebounding very sharply indeed as a trade and bank trade finance centre. Then on factor 4, infrastructure. Stability of the macroeconomic and political system. And one thing that I note about most of the centres here is that the perceived, and I use the word perceived carefully, but the perceived stability in the macroeconomic and political system is regarded as a positive. Clearly with the global economy going through this period of shock and then the weak rebound that we've seen, the Eurozone centres obviously have seen their scores diminished somewhat, and particularly Tokyo. I think the second issue, and this is absolutely critical, is the rule of law. Because whether it's banks, whether it's hedge funds, whether it's private equity funds, whether it is other investors, they will of the legal system, and they are 100% confident that assets in that country are protected. And that also extends to the mutual fund market, the exchange-traded fund market, and other investment funds. And one just sort of minor tangential point is that one of the big growth areas in the investment management industry is the ETF market. But if I want to buy a ETF on the Russian market, where do I do it? The answer is I do it here. I don't go to Moscow to do it, and obviously something is wrong there. One centre which has been singularly successful in developing itself as a base for the mutual fund market has been Luxembourg. I would also say that if you look at the work that's been done recently over the past 3 years or so in Singapore, it has developed itself very successfully as a centre for the distribution of mutual funds in Asia. Then I think general competitiveness, number 5. First of all, financial centres are perceived as safe havens. If we look at the last 4 to 5 years during the period of the financial crisis, Switzerland obviously has been perceived as almost the ultimate safe haven. This caused actually the Swiss a huge problem because with that safe haven status, the Swiss franc became grossly overvalued, and it's only been because of extreme intervention by the Swiss National Bank that they have actually managed to stabilise the currency. So there is, if you are a safe haven, that may sound positive, but it does come with a cost, and that cost is an overvalued currency. I would also make a very similar comment to Singapore. Singapore does not yet have a grossly overvalued currency, but clearly it is one threat that they have. And if one looks at the Asian markets, Singapore certainly has that strong safe haven currency. Then language. Obviously, since I'm English, I'm extremely biased, and of course I would stand up here and say your financial centre has to have English as its main language. But whether we like it or not, all the characteristics of safe havens and successful financial centres is that at least English is the language of business. And I remember many years ago at Credit Suisse when we took the very controversial decision that all board meetings would be in English, not in Schweizerdeutsch, and that the language of Credit Suisse would be English, and I think I managed to upset a lot of people by trying to push that through, but the reality is you have to have one common linguistic platform. And then I think the final factor, which is obviously somewhat contentious, is appropriate regulation and measured enforcement. And I think one can get into a debate about whether, for example, in London or New York, and certainly if you look at Alan's presentation on the activities of the Department of Justice in the States, you could argue, looking at that potentially we have too much regulation in certain jurisdictions like America. But let's not forget that if we had had this conference in 2005, 2007, the mantra here in London was, let's have light touch regulation. And light touch regulation, what does that mean in English? It means basically very little regulation. And we all know that regime of very little regulation actually was one of the many causes that led to the financial crisis of 07 and 08. So those are the criteria that we use, and then we update this study every year. I actually would be quite interested to carry out quite a detailed analysis on how Moscow would score here. In terms of the other centres, I would just highlight perhaps 4 or 5 points in conclusion, which is, in our view, New York is the #1 financial centre, just 4 years ago, in fact, London on our criteria was the #1 financial centre. So London has slipped relative to New York. Singapore has improved dramatically, and I think it's interesting how Singapore has improved relative to Hong Kong and to other Asian centres, with obviously Tokyo slipping well behind for a very large number of reasons. And then the Eurozone centres, frankly, are struggling to develop themselves as world-class leading financial centres. So I hope that's given you some ideas, and those of you based in Moscow, those of you who are working on developing Moscow as a financial centre, clearly it is work in progress. I hope I've given you some ideas to try and accelerate that work in progress. Thank you very much.
Thank you very much, Robert. I think it's now time to open the floor for questions. So who will be the brave first one?
Can I ask a question to start with?
To yourself, or?
No. I want to ask a question, Rob. One of the things we were entirely puzzled by was, why did